Welcome back to ILA On Air. I'm Anastasia, CEO and co-founder of ILA Law, and this is when we're bringing to you bite-sized education to the property and finance community, because at ILA we have an incredible network of brokers, solicitors, lenders, surveyors, you name it, we know them, and this is where we sit them down and they make the complicated simple, which is something we love doing at ILA. So it's 20 minutes, grab your cuppa, and we're going to bring you up to speed. So today I'm joined by Billie. Hi, Billie.
Hello.
How are
Thanks
you?
for having
Okay?
me on. Yes, I'm good, thank you.
Good. And Billie is a broker at Serious Finance, specialising in commercial freehold property. So this isn't my expertise, which is fantastic because it means I get to ask all the questions that maybe as a developer, investor, someone interested in property, you are trying to understand. So when are these clients speaking to you, Billie? At what point? When does that happen?
So I deal with a lot of clients from investors and developers all the way through to business owners. So when it comes to a business owner and when they're speaking to me, it's a lot of small, medium-sized businesses that are looking to grow and looking to acquire freehold businesses that they maybe are already leasing. So maybe they have the opportunity to buy the freehold, so the bricks and mortar, from their landlord, and they're currently paying £52,000 a year on a rental premium, and they've been given the opportunity to buy that bricks. Those bricks may be up for $625,000, and they can really establish them and bring some equity into the business, opposed to just paying the rent to the landlord. So it opens up doors. More often than not, mortgage interest is a lot cheaper than the rent that they're paying to the landlord as well. So we're looking at a lot of different ways to structure that purchase, maybe refinance existing freeholds that they already own and help businesses to grow.
Sure. So, that's interesting because you're right. There's a lot of businesses, obviously, who rent their properties, like particularly like restaurant owners will be renting, paying a lot of rent, but then that jump to buy. So that's like 625 grand, for example, you've just dropped in there, right? How are you bridging that gap? Obviously, guess you've got so many different funding arrangements, opportunities, but that seems like a big jump to me. How do we go from that?
Yeah. Okay. So great question. There are varying different types of commercial freehold transactions, but there's different types of ways of financing them. So you've got bridging and you've got commercial mortgages. Commercial mortgages will tend to be for those operating businesses that already have decent accounts. They've already got like some tangible cash flow, and we can evidence that they can repay and start servicing mortgage interest from day one. Or you've got new businesses that maybe they might not have operated a pub before or a restaurant before, but they're looking to buy something and repurpose it. So maybe a vacant freehold property, maybe something that maybe doesn't have any financials behind it, any serious like business plan, but they're going to implement one and put one together. So with some robust forecasts and a decent business plan, good CVs from their ultimate beneficial owners, we can look at bridging finance. So that stopgap between being able to service the mortgage interest in 12 months' time and repaying the bridging loan with a longer term mortgage solution, and the businesses that are financially ready and can mortgage the property day one, typically get higher loan to value with a commercial mortgage. So commercial mortgage lenders, rather than lending against the bricks and mortar vacant value, they call it, commercial lenders will lend against the goodwill, the market value of the business and the freehold property. So you tend to get higher leverage on a commercial mortgage. Bridging finance, you're usually capped at sort of 65-70% of the bricks value. So clients have to put in a little bit more cash and equity up front, but you're able to kind of finance that business before it's ready to run.
Amazing. There's so many questions that are firing around in my head, so I'm going to think about where I want to go with first. But something I found interesting, again, I'm going really back to basics, but when I first ever kind of looked at like buy-to-lets, years ago, and I was like, oh God, you need like 20 to 30% deposit. Somebody else might be listening being like, that's not true, but that's generally what I kind of heard. How much are we talking, like, you say like finance ready or cash flow ready, like how much money does someone need available to be doing this stuff?
It really depends on the opportunity, and I'd say it's very regional, but in between, like there's lots of there are big kind of asset-based businesses that are selling off loads of commercial property at the moment. It's tightening up cash flow for them, having these assets on their book. They want to release, they want to off-sell. Freehold property is more of a small to medium-sized enterprise business rather than a big CBRE type business. So there's lots of larger asset holders that are off selling loads of stock. So it depends where the property is, depending on how much you need to invest. And it also depends what your goal with the property is. So if you're planning to let it out to a third party, if you're an investor and a landlord, and maybe you're looking at utilising the space for leasing out the downstairs to an operator on a solid, tangible lease, and then maybe you're looking to develop some of the upper spaces. A lot of restaurants often have residential uppers, maybe with the ability to convert to kind of like a HMO, or maybe the ability to develop into airspace, because that's something that developers and investors are looking at quite a lot recently, is airspace conversions, or development. So when you're an investor and you're investing into property in that sense, you often have to put in, I'd say, 25% cash day one. When you're a business owner, and this is often a misconception with property finance, but your commitment and your cash equity can be looked at in other realms. So not just your day one deposit, but what you've spent on the property since you took over the lease. So if you're buying that freehold, but you've leased the premises for 5 years, have you spent 200 grand on refurbishing a new kitchen, putting in an outside dining space, spending money on like an extension or something like that, new signage? If you've spent 200 grand over the 5 years that you've been there on refurb and fitting alongside the £50,000 a year rent that you're paying, that's called what lenders would say is a quasi investment, so a quasi contribution. So that's kind of your skin in the game and your equity that lenders will look at.
Wow, that's interesting.
So yeah, if it's your business and it's you are the operator, and maybe there's a property company and an operating company that you're going to both be running at the same director, then you tend to have to put in less deposit as part of the transaction, because lenders will think, oh, they've just been given this opportunity. Maybe they wasn't expecting, maybe they wasn't saving up for this freehold buy. So yeah, it depends on who you are, what you're looking at doing, and what the opportunities are within that property, I'd say.
Okay, and so does that similar type like arrangement apply to bridging as well that you just explained?
Yes, so no. With commercial mortgages, it tends to be for those ready-made businesses that are either they don't require any refurbishment, or that don't require any like longevity planning. So there will be some element of longevity planning, but the business is ready to start repaying the loan from day one, whereas bridging is it's quite black and white, and it's quite simplistic with the right broker kind of acting for you. Lenders will look at what are the bricks and mortar valued at, and they will lend you up to 65-70% on a commercial asset loan to value. And because it's shorter term, it's more risky for the lenders. In more cases than not, lenders are having to rely on the customer establishing a really good business plan for them to be able to rely on there being an exit or a repayment to the initial loan. So no, you can usually be a little bit more flexible with how much you can borrow with commercial mortgages, and less flexible in the bridging space. But bridging, that will enable you to kind of tap into other equity in other properties. So if you've got homes, if you've got other buy-to-lets, whether they're menial or large, we can sometimes pull equity out of those properties to minimise your cash in. So it doesn't always have to be hard cash that's in the bank.
Right, you can
it
kind
can
of
sometimes be
it.
it can sometimes be equity in other properties. So second charges for business purposes against your home.
Okay,
or,
interesting.
Yeah, refinancing of other properties to pull equity out.
Sure. So if I was a restaurant owner, to go on that example, and I wanted to buy the freehold of the property that I'd been leasing, and I didn't really have much capital laying around, but I was also sick of paying my lease, and also the landlord was happy to be selling at that point, wanted to sell, but I didn't really have much savings. Can I then say, but I've got £200,000 or £100,000 equity in my residential home? Can I solely use that as the kind of the capital that's down, or do I still always need a bit of cash?
So a big misconception from customers is how much equity they have in their current home from their perspective, and how much equity they have from a mortgage lender's perspective.
Sure.
So sometimes people say, I've got £100,000 property and I've got a £50,000 mortgage, and I've got £50,000 equity. You don't, unfortunately, from a lender's perspective. I know, it's really annoying. A lender will only really lend up to like 80% loan to value. So really, if you look at 80% loan to value of 100k, that's how much your house is worth.
Yeah.
As an £80,000 a lender will lend you. You've already got £50,000 outstanding to Nationwide, so you can borrow £30,000 for your next project. So I would say it depends on how big the property is, and with regards to this is your business, this is what you lease, more often than not the purchase price will be reflective of that. Because if it's my restaurant, say I run the Dog and Pickle in Essex in Ongar, and it's my business, it's running really well, it's my customers, it's my trade and my accounts, then the bricks shouldn't be demonstrative of that. The bricks and mortar should be valued at, like I said, 600k, something like that, for a nice like destination pub restaurant. But the business should be worth 1.5 potentially. So like I said earlier, there are sometimes opportunities to pull money out of the market value rather than just like the bricks and mortar value, which is what bridging lenders will look at, opposed to commercial lenders who will look at the bigger picture.
Gosh, there's so much
Have
there.
I made it simple enough for customers
you have. And like I said, it's really interesting because I didn't know, I said this isn't my area, but I didn't know any of those things and these opportunities. And actually when people, I think, are sharing this in a more kind of like, these are the products, these are the options, I think maybe people can just be more creative and think, well, actually, I could do something like that. And we've used the restaurant as the example, but what type of like businesses are you mostly seeing at the moment, and where's opportunities at? Let's give people like, where can they make this money? How are we doing that?
The restaurant sector is a massive business, I think, and what we kind of started with, because I think hospitality has kind of been the negative part of the economy for the last few years.
That's people say, because it has negative, so how is it going positive?
I see a lot of positives in the hospitality industry because people say the high street's dead. Well, it's not dead for the kind of the nice cafes, the nice bistros, the nice pizzerias, the restaurants that are filling up the vacant retail space. So footfall on high street has been massive for like the restaurant sector. And post-pandemic, I think people have been eating out more locally, people have been supporting local businesses a little bit more. And although there's a lot of kind of negativity around the budget and rising costs for those types of businesses, I think people are still spending a lot of money in those sectors. So it doesn't just apply to the restaurant sector and the hospitality industry. I think there's a lot of opportunity in something like the care industry, the care sector. There's a lot of opportunity in manufacturing, but very regionally based in terms of where are the higher value industrial assets, where are the opportunities for the care sector and the investors and the operators that are looking for these types of buildings or these types of premises that run good. For example, care homes or businesses like that. When you talk about the other sectors of the commercial property industry, care comes in so many different shapes and forms. You've got elderly care, you've got young people care, you've got assisted living, you've got so many different. You've got living care, where the carer lives in. So lots of different types of investments, lots of different types of business strategies, but more about how you go about financing them, when to speak to a broker, is kind of where I'll come in and help you strategize.
It's a word to say sometimes. I'm like,
I mean, it's not just about the mortgaging, it's not just about the debt that we can raise. It's about, is your overdraft facilities appropriate? Is the invoice finance that you've got appropriate for your type of business? Is the banking account that you've got? I saw a really good ad actually earlier for one of the banks that we work with on the Underground in London, and it was a quote from a customer that said, I've just opened up banking with a bank that actually lets me run my business rather than making me chase their tail with, different things that they want to see, like management accounts and things like that. So there's lots of things that we can help put in practice alongside the mortgage rather than like a full package.
Yeah, it'd be really interesting to get onto that. What do they need ready when they're coming to you? But it's actually really interesting what you've just said, because I don't know if anyone listening to this has noticed this, but I live outside of Dorchester way now, but I used to live in Bournemouth. And Bournemouth, all the shops are shut down, but there's just loads of restaurants. And for a long time, I was like, why is this happening? Like, there's lots of cafes. Because then I also was slightly confused as to, if you're missing shop footfall, how are the restaurants or cafes going to make money if no one's coming to buy shops and going to buy clothes because they're not there? But actually, I'm wondering if what you're explaining then is what we're seeing, where they're taking over these vacant premises and then the whole high street's turning into just cafes and restaurants. I know I'm seeing that in Bournemouth. So that actually kind of explains that.
I think it's all over, and I think people want to get out of their house. If people don't have the opportunity to, go to the high street for shopping, because people are shopping online, or people are shopping in like the Westfields and the Lakesides and the shopping centre regions of the country, then they still want to go to the high street for something. They still want to meet their friend for a coffee, or the mums after the gym. They want to go and they want to go and meet somebody, and so that's the type of businesses that are flourishing. And I still think, like, even in the tightest times of the economy over the last 5 years, people are still spending so much money on food. And in the last, like, particularly after like the pandemic, people really care about, healthy living, like healthy, like diets and things like that. So I think like higher quality coffee, higher quality sandwiches, like they're really thriving in every town across particularly Southeast and London and then down from there.
Yeah, no, I agree. That's really helpful. So touching on foreign education piece, really understanding then, if someone is coming to you, what do you want to see from them so they can get that ready?
So an investor coming to me, if they're looking to buy an opportunity to invest in maybe a restaurant with or a development opportunity, I want to know what they're looking at buying. So I want to see the sales particulars, and then I feel like it's my job to tell them, this is what we can do, take away this project budget, this is what I feel like you'll be spending overall, come back to me with obviously evidence of your cash commitment, evidence of like a 2-year forecast, like what's this property going to look like in 2 years, obviously copies of like tenancy details and things like that. But I feel like in the first instance, I just need to see what you're looking at buying, and a little bit about you and your experience and opportunity is really what it ties down to. And then for an operator, what I'm looking for is what you're looking at buying. Is it how is that adding to your business? Is it where you're already trading from, or is it the next site that you're going to be taking on to expand? And then I want to see obviously your company accounts, whether you can service a loan right now, or whether you maybe need to have a little bit of interest only time for 2 years, or interest free time for 2 years where interest is rolled, similar to a bridge, in order to get you where you need to be in 24 months.
Sure. So that kind of leads on to the question I was thinking as you were speaking. So, where you need to be in 24 months. So I remember when I bought my first just residential home, obviously there was being surrounded by so many incredible brokers. I knew way in advance what I needed to have available, and like, in making sure that obviously from a tax and accounting perspective, there's 2 ways you can manage your accounts, which is, minimize as much tax as possible. But that also can have the impact of minimizing what your income or revenue or profit. Whereas obviously if you want to maybe be buying something, you want to be making that as elevated as possible. So is there things, so, your income to be able to borrow more? I don't know if that's, again, applies here, where people, if we're talking about what do you need to have ready for 24 months time, what tips could you give for people to get ahead of the game and not come into you like, oh shit, I haven't got any of that. I didn't do that. I didn't plan that.
So a lot of the time with commercial property, people don't plan, especially when it's operators buying the freehold, because they might not have known that this opportunity was coming up. Unless they're in the negotiations with their landlord, often it's the landlord like, we want to sell before we take this to market, before we go to Savills and like, Frank, do you want to buy it? Because it's easiest to go through you as the tenant. But I would say, yes, in some instances, it is a disadvantage to be, kind of pulling down your profit to minimise tax, because then you don't have the profit within the business. But when it comes to financing, lenders don't look at your net profit and that's all. They look at a figure called EBITDA, and without overcomplicating things too much, it's what is your net profit plus any add backs that are accountable. So did you spend £20,000 on machinery this year that you're not going to spend in future years up and coming, and did you write that down for tax? And we'll add that back into your bottom line. Did you obviously the rent that's in there, you're paying £50,000 a year rent, can we add that back in as well? So it is about looking at what are sustainable add backs, and that's your new adjusted net profit. So different to residential mortgages, commercial lenders will be a bit more commercial, and will look at the bigger picture, as I said before, rather than just this isolated transaction. But if there isn't enough net profit within the business to service a loan, that's when you've got the other types of financing strategies like bridging, like interest only term mortgages, where you're not repaying the capital and the interest straight away. You're just repaying the interest, or you're rolling the interest up to pay in 24 months.
That's interesting. Yeah. And I've seen recently, I don't know if this is controversial, but I saw recently someone post on LinkedIn about how more and more lenders, or another lender sadly from his perspective for sure, and I'm sure many brokers feel this way, but had gone so that people can go direct to them. Now, you as a broker, adding so much value in everything you've just told me now, it's like, okay, well, I wouldn't have known that. And I mean, appreciate maybe if I was specifically looking for that work or looking to acquire properties, I might have educated myself a bit more. But you as a broker, what is the benefit with working with you? Like, who are you going to? How are you able to place deals? How are you able to make this happen better and quicker for clients compared to if they're trying to go direct?
Yeah, with commercial mortgages particularly, a lot of clients can go to their own existing bank. Yeah. They bank with HSBC, they bank with Lloyds, they bank with Santander. Why can't they just go to the bank and say, can you give me a loan? Can you give me a mortgage? Well, the point of a broker is that you're one person, or more often than not, you're a team, but you can give like a kind of a full audit of all of their products and their facilities that they've got. So their mortgage, like I said, their overdraft, their invoice finance, their trade finance, their asset finance, whatever they've got in the business that's finance related, you can do a full audit of all of those facilities and look at whether they maybe need a bit of a restructure, whether they have quite a lot of debt on HP. So a lot of businesses that maybe buy machinery on short-term leases like you would buy a car, well, would this be better off us consolidating it all with one mortgage? Whereas a bank it's not that we're trying to sell as a broker, it's that we're trying to look at the overall picture and look at if Barclays can't do this one thing altogether, then they're not going to be offering to you, well, why don't you go to NatWest to look at this part of the business? Yeah. So it's making sure that the client has the best options from all of the available lenders. Clients often won't have those relationships with the high street and the challenger banks. And as a broker, we've got access to the entire market and really good relationships there. So it's from obviously the initial packaging and placing, making sure the client has got the best options available to them, but then also making sure that they've got the right valuer to do the job, also making sure that they've got the right solicitor, they've got the right partners as part of the process. And like you said earlier, we've got a wider network than a client has. They focus on running their business, but we've got contacts within all of the various sectors that make the mortgage transact, and hopefully make their life a lot easier. So it's not just about placing the initial finance, it's about making sure it actually happens and it actually goes through.
Yeah. And what are you seeing the appetite like from lenders?
In the commercial property sector is actually is probably massively increasing. So as I said earlier, I said between 65 and 70% loan to value from bridging lenders. Well, more and more lenders and our preferred kind of small panel of lenders that we go to for most of our transactions, because they're really fast, they're really flexible, they're all moving up to 70% loan to value on commercial property. So they're obviously seeing a little bit more room for growth in that sector maybe over 2026. They're seeing opportunities for investors that they maybe hadn't seen before. So their risk appetite's going down.
That's good.
Yeah,
compared to what we hear in the news. We're not hearing great things, but I'm getting positive vibes from you.
I'm always I would be out of a job if there wasn't enough opportunity for investors and business owners. But I definitely think there's a positive sentiment from lenders, increasing loan to values, softening rules and regulations about experience and sector-specific experience particularly, because I think a lot of maybe business owners would say, well, I can't buy that commercial property because I've never run a hotel before, I've never run a restaurant before. But okay, you've worked at, this is just a live example of a case I've done quite recently. There's an accountant that worked for the Big Five, so I had a really good experience it was a strong business acumen. He'd worked in a restaurant when he was 18 through to 25, and it was a family-run business. It's not significant from an operational perspective, but he had a really good accounting background, he had a good cash commitment, and he had a really good business partner, which was actually the manager of the pub he was taking over.
Right.
So it's not just about who you are and whether you've run 5 restaurants before. It's about who you're surrounding yourself by and how you can strengthen up the CV. Just like when you're applying for a job, what other skills do you kind of milk on there a little bit and say this is transferable for this project, but.
Yeah, and I guess you can help them with that. Again, so if a client comes to you and it's like, I want to buy this, but I don't really know, you can be like, okay, well, help them search their memory bank for experience they might have. Yeah. And then you can present that to the lenders obviously in a factual way, but also like, you know, this is shining a better light on this person, right? Because they've got that experience.
Tying back to why you'd use a broker, it's that filter, it's that support with your business plan, it's that support with your CV, it's that support with your forecast. You know, you might not have done this before, you might not know what lenders want to see. You might be giving too much information, you might be giving too little. So it's our responsibility to kind of help shape it all. And people use the word package a lot in broking, because it's rather than chucking a bunch of documents at a bank and saying, what can you do? We figure it out for them. We kind of portray a bit of a business plan or a deck, whatever you want to call it, to a bank and say, you would like to fund this, not the client would like you to fund this for them. It's why do you want to support this deal? So it's selling it to the bank rather than just chucking it across.
Amazing. Yeah. And they've got your positive lens on it as well, which is helpful. You want someone who's being positive, proactive. You know, that's like, I'm really not a fan of like no people. I'm quite a yes person in terms of like, can we make this work? How are we going to make this work? And I think that's people we all want on our team. So Billie, how could people find you if they do want to speak to you more about this, or they want to work with you? Where's the best way to contact you?
My email address. So I don't know if you do pop emails.
Yeah, I'm going to pop the emails on at the end. I'll pop all the emails on, but just so people can hear you, where do we find you?
Yeah, so email, my mobile number, probably you'll pop that on there as well, and LinkedIn. Yeah. So pop me a message on LinkedIn. Obviously my name is Billie Cox. Drop me a DM and then we can arrange a good time to have a Teams, either have a coffee. I think it's always nice to put faces to names, so rather than just like a blind phone call, we can have a Teams call or an in-person meet.
Yeah, amazing. Thank you so much, Billie. That was so helpful and really well explained, because it's definitely not something I understand. And I feel like I'm going to learn so much doing this. I'm going to be an
understand
oracle
a little
bit
more about it now once we spoke.
Yeah, thank you so much. So don't forget to keep tuning in to these bite-sized property education pieces. And if you need Billie, get in touch and we'll see you soon. Bye.